Hi everyone, welcome to another edition of the Lunar Orbit podcast, where I provide timely updates and fresh thoughts on the Terra Lunar ecosystem. My name is Gerry, and today is Monday, the 7th of February 2022. In today's episode, I'm going to be talking about Outlet Finance and their UST-based MasterCard, an update on the Galactic Grids NFT drop, the borrowing and lending protocol Mars, and their upcoming Lockdrop, an update to their whitepaper, and finally, the concept that UST is oil. Okay, let's get into it. Outlet Finance. A few weeks ago, they dropped this tweet about a MasterCard that's linked to their bank account. And pretty exciting news. And they've had a Ask Me Anything on Terra Spaces, which was well worth the listen. Very enlightening. And I was quite impressed and enthused about what's coming. So not just Outlet themselves, there's several other offerings that are similar that are going to be landing in the next couple of months that I think is going to help provide an awful lot of UST being minted. So basically these guys, the concept behind them is that they have an FDI insured bank account. So that's the insurance that is required for banks in the US. And linked to that, they have a UST account, essentially. So it can be just completely abstracted away from for users that aren't used to using DeFi and they just want to get the extra yield from Anchor. But for advanced users, they can actually set up their own actual Terra address and then using Wallet Connect, interact with all the DeFi protocols that support Wallet Connect. So they can just come in, log into their Outlet account and connect that directly into Anchor or to Apollo or any of the other offerings that are out there and start using Terra DeFi. So pretty amazing stuff. What's really cool is it just all shows up as one account and one total with your funds. So a user doesn't really know the difference between if the actual bank account only has $50 and their UST part is $5,000. The total is just going to say $5,050. And when you take your debit card to an outlet and swipe it, it's going to do that little transfer in the back end, transfer your UST into your actual bank account and make the instant payment that way. So you don't have to wait, 5 days to go through the process that is required in the US banking system to sort of transfer out of crypto and into fiat. This is just all happens natively. So you can get, above average returns, or way above average in terms of bank interest on your funds, basically. And some people could just get their whole, life savings put into this, or even just their income could just go straight into this bank account and start getting above average yields. And it's sort of done in a nice, safe way that's less daunting to us DeFi degens. So really exciting. These guys already have 40,000 customers. They've been running for a couple of years and basically using, Aave and Curve to generate yield off of stable coins within Ethereum. But obviously that's just not sustainable in the current environment. And why would you, want 2 or 3% interest that you can get in Aave when you can get 20% in Anchor? So this is just one offering. There's going to be a whole bunch of these coming out. So you've got, I think it's Alice Money. That's another big one in the US that's coming. There's Tick Finance in Australia. I think it's Cato Money. So there's all these things coming out soon. And it sounds like it's getting close. I think one of the big holdups and bottlenecks was actually waiting on the MasterCards to arrive themselves. These guys, their beta group's already out. They've already got the cards and they're using them in the real world and everything's working really well from what I've heard. And it sounds like within 30 to 40 days, they'll be able to push this out and offer this to their customers. They've already got 40,000 people that are signed up and using their protocol. They've done over $120 million worth of volume already. So it's a really good start and very interesting to see that what's coming. So again, give this Terra Spaces a listen if you want to get a little bit more info, but I found it really interesting and it's coming, guys, it's coming. All right, next up, the Galactic Grids NFT drop. I mentioned this in the last podcast, I believe. Just wanted to mention that you can actually still mint these. They haven't quite minted out yet, but it's getting very close. So if you haven't got one and you want one, get in here and get going. Go to grids.gg and then you can come in and choose your 3-letter address for your NFT. So some of them, a lot of them won't be available, but there's all sorts of options in here. We could go Do Kwon is a legend. I'm sure that's not available. Obviously my wallet's not connected, but Anyway, you get the idea. Looks like there's still about 700 of these guys left to mint. So by the time you listen to this, it'll probably be a lot less. So yeah, if you want one, you better check it out quickly. Otherwise, you can get them on the secondary market, I believe. Alrighty, so the Mars protocol. This is a big deal. This is a very big deal. So the Luna ecosystem hasn't really had much in the way of a market maker in terms of being able to borrow and lend and unlock the potential of your assets outside of Anchor. So there is an LP money market coming soon, I believe, as part of Nexus, which is going to be really interesting. But Mars protocol is kind of going to be like our version of Aave. It's going to be massive. It's been incubated from Delphi Digital and in collaboration with Terraform Labs. So it's coming. They've got this tweet came out here saying that the Lockdrop is in sight. They're targeting the 21st of Feb. So it's just around the corner, 2 weeks time pretty much. So get your funds ready. So this will be probably a similar model to the Astroport Lockdrop, where you'll have to lock up some assets for a period of time. And that's how they sort of bootstrap the protocol here. So one thing I didn't like about Astroport, and in hindsight I'm sure they would do things differently, is they released the token with their Lockdrop, but you can't do anything with the token yet. You can't stake it in governance and start earning any rewards yet. So I think if they had their time again, they would have done that differently. So people in crypto are incredibly impatient, and everything's an opportunity cost in this game. So if you're not getting a return on your funds, people will start to look elsewhere. And the protocol, the price for Astrodrop, it is slowly bleeding out as it unlocks. People are dumping it because they want the opportunity to reinvest in other areas. So hopefully when Mars drops, you'll be able to start staking Mars on day one and earning a return on it, because I feel like everything that doesn't provide immediate utility just gets sold for Luna. Luna is such a strong coin in our ecosystem that our protocols have to work really hard to try and hit the ground running and give a return to their users. Otherwise, they look elsewhere. So it will be interesting to see how that plays out with the Lockdrop and the actual token generation event for Mars. But yeah, this is a massive deal. This is probably one of the biggest protocols, and a lot of stuff is waiting on Mars. I know, like Levana, it doesn't work unless Mars is running, for instance. So that would be big too. They've done an update on their Whitepaper, or their Redpaper as they call it. So if you go to this Medium article, you can see all the updates here. I think it's dated the 28th of May. So it's a little confusing, but I believe they've just updated the original post. And I'm not even sure what the differences actually are, but it's still worth revisiting. One thing that's pretty cool about the Mars token is when you stake it, I think it's as X Mars. It's a similar model to, say, Sushi, where it starts to accrue value. They mark it by Mars and put it back into the X Mars pool, and it auto compounds over time. But one thing that's quite cool is it actually backs out the protocol if there's a failing in governance and there's an issue and there's a shortfall. It's to help protect the protocol, and the X Mars token holders are actually on the hook for some of that. Up to 30% of their tokens can be burned to cover any shortfall. But they're also creating a reserve to make sure that hopefully that doesn't happen, and the reserve's there to protect users, the X Mars stakers. So that would get sold off first to cover any liquidation events that happen. Because with Mars, one thing to keep in mind is it does protocol-to-protocol lending similar to the Iron Bank in Cream Finance. So it can be with no collateral, because it's all based on smart contracts. So the Martian Council, which is the DAO itself, the X-Mars stakers, they sort of decide via governance as to what protocols can get this line of credit. So if there's an issue with the protocol and the funds, get stolen or exploited or whatever, there's going to be a shortfall, and that needs to be protected. So that's why they've gone with this model. So you've really got to have skin in the game to be an X-Mars staker, but you get the rewards of the returns. So it's a good model. It makes it sustainable, and it protects people and gives them confidence. So just having a real quick look at the token itself. There's this initial lock drop. It's only 7% of the total token. And then you've got quite a big slice of the pie here, 53% that goes to the community via incentives, liquidity mining, staking, that sort of thing. So that's a pretty healthy distribution to the community. 30% is, it's a fair bit to the insiders, but, they've put all the work in building this thing. So fair enough. And it does have a nice long vesting schedule. So these guys don't get any of this until after 1 year, and it vests over the next 2 years. I also like to think that Delphi Digital probably won't be just dumping this on everybody, because they're very long the Luna and Cosmos ecosystems, and they're co-collaborators. They're building this stuff with the devs. They're helping design it. They're helping with the tokenomics. They're not just coming in at a seed round and buying up the token at an early price. They're actually helping to build it. So I don't think they're going to dump. Maybe they take some profits, but it's not in their interest for these guys to help collaborate, spin up these protocols and see them fail because they've just been dumped on to retail. So I think they're a good actor, and I think it's it's VC done right, if you ask me. They're not just coming in and throwing money at stuff, they're throwing an awful lot of resources at it as well, which is quite cool. All right, the last thing I wanted to talk about was the concept that UST is oil. So actually referring to one of my own tweets here, where it says Cosmos and Atom and the IBC are the cogs, Terra Money and UST is the oil, and Osmosis is the well. So what do I mean by that? Basically, if you're not that familiar with the rest of the Cosmos ecosystem, it's just blowing up massively since this IBC was introduced. It's a blockchain connectivity protocol. So it's just a protocol that joins all of these Cosmos networks, which Terra is one of, together, and allows a free sort of flow of information and assets back and forth. So if we go to mapofzones.com, this shows you what's going on in real time via the IBC, and you can see how hyper-connected everything is. There's Terra, there's Osmosis, Cosmos, Hub, Stargaze, NFT. That looks like that's blowing up. That's getting big. Juno, that's a new layer 1 platform that's spun up as well. It's getting an awful lot of traction, but Osmosis is actually the biggest out of everything at the moment. So I think if I just bring that down, you can see that, Osmo's got 3 times the volume of the next biggest. And here we are with Terra. But the point is, Osmosis is a decentralized exchange and a proof-of-stake blockchain. And it's getting a lot of liquidity coming into it. And if we have a quick look here, there's already a lot of pools with UST in it. Luna UST, Euro UST, Juno UST, not even sure what XKI is, Bitsong. So all sorts of stuff here, Comdex. And if we go down to the bottom here, it shows us the biggest pools. And number 2 and 3, half of them have UST in them. Osmo UST and Luna UST. They're the third and second biggest pools on Osmosis. So over time, this is just going to get bigger and bigger and bigger. And a lot of tokens are going to want to have a UST pairing. They're not just going to want to be paired potentially with Osmo or some other coin, because they're both volatile assets, and people do like to have that level of volatility evened out by having UST pairs. So there'll be an awful lot of UST pairs that flow through not just Osmosis, but all of this whole network. So UST will be the oil that greases these wheels. In Ethereum land, people, they refer to ETH as gas because it's used to pay for fees. But one cool thing with the whole IBC network with Cosmos is that any asset that's in the IBC can be used as gas, provided that the validators accept it. So a lot of people are going to be wanting to pay for gas fees over time in UST rather than their deflationary crypto assets that they want to hold and appreciate over time. So UST could be used as the gas as well. So it's got a huge future. If you have a look at this other tweet here from No Sleep John, he's a great follow on Twitter. He's talking about EV Moss, which is a new network that's going to be launching as part of this ecosystem. And there's a good tweet on here. What it is will be EVM compatible, so any ETH project or any project on an EVM chain can easily migrate over. So you might start seeing Aave and Sushi, Curve, etc. pop on over into a Cosmos chain, which will be massive. And if UST is the dominant stablecoin, that's just more bullish for Luna. So the other thing is, if you look down through the comments here, you got several people saying, I've got my UST on standby. I have some UST ready to go. My UST is ready to be deployed. You can see the theme here. It's UST. And UST is how Luna is going to make it. It all benefits Luna holders that UST gets used everywhere, and it's slowly getting its hooks in all over the place. It's also going to have first mover advantage because it's already in this ecosystem. Like USDC and Tether are going to have a really hard time cracking into this. The other thing that's worth mentioning is Osmosis itself. They've got their sights on being the stable swap provider for this ecosystem, for this whole ecosystem. So Curve is one of the biggest protocols on Ethereum. And if you want to swap between USDC and USDT, so Tether or UST itself, or DAI, in large volumes, you want the slippage to be as small as possible, because sometimes there is a difference in price between these assets when they lose peg. And having deep liquidity, is essential to swap in and out. So Osmosis wants to be the liquidity hub for those stablecoin swaps. Now we have a look at Curve here over on Ethereum, and we have a look at the pools and then go via USD. These are all the pools for different stablecoins in Ethereum land. It's crazy. And the biggest and best stablecoin that is decentralized, without question, is UST. There's no third-party risks, where there is with Tether and USDC. And they have blacklisted addresses and stopped people from transacting before. If we have a look at this pool here, 3 pool, this is the big one. We've got over $4 billion in US dollar stablecoins. So if this sort of volume migrates over to Osmosis and UST is the main pairing, that's a lot of UST that's going to get printed. So that's my thoughts on where we're going. That's why I put this tweet out. Terra UST, if you want the best multi-chain play in crypto at the moment, in my opinion, it's Luna, because UST is going to end up everywhere, and there's a real good chance over time it becomes the dominant stablecoin, full stop, because of its decentralization. All right, guys, that's my thoughts on it all. I hope that's been interesting, and thanks very much for watching.